While many Australians grappled with the cost of living in 2024, many experts expect the new year to bring interest rate cuts and a further easing of inflation.
We're pretty confident that the worst of the inflation challenge is behind us, but we're not complacent about that.
This year, Australians will have an opportunity to remove a weak and incompetent government that has sent our country backwards.
Hello and welcome to the Bloomberg Australia podcast. I'm Rebecca Jones. On one side of the globe, a new president was sworn in this week. And over here, we're still swimming off our festive indulgences and wrapping up summer holidays, but not for long, because it is time to get a jump on what's likely to be a blockbuster year for Australian economics. To help me get the lowdown, I'd like to welcome economist James McIntyre from Bloomberg Economics to the podcast. James, thanks for joining me.
Thank you very much for having me.
Now, 2024, it felt a bit to me like if the economy was a person, it would have been holding its breath for the entire year. When I think back, I think of grumpy consumers, just like waiting with bated breath for the RBA to cut rates. Let's rip the Band-Aid nice and early. What does the year look like ahead for rates? Are we turning a corner?
Well, look, we think so. We think that we've moved from being a year of everyone trying to just stay alive till 25 to now being here and looking forward to, all right, well, it's time to for things to get a little bit better, a little bit easier. So we've seen the economy really struggle last year. We're thinking there's going to be much stronger this year, but that policy is going to have a big role there. So we're seeing the situation where the RBA is moving from will they cut territory to, well, when and how much. Our view is that when we put out our outlook for 2025 was that we could see up to 100 basis points of interest rate cuts this year, beginning from the first quarter, with the RBA coming back and starting the year with 25 basis points of easing. But markets are pricing in a slightly less ambitious rate cut profile from the RBA so far. And as we sit here, especially after having just seen some strong jobs number, there's nothing to indicate that the RBA isn't going to cut. But it does suggest that they don't need to rush to begin 2025 rushing out of the gates.
The jobs data was okay last Thursday, right? I'm interested in the concept, and this is something that I've heard you talk about before, of the misery index, and just reflecting now, I can't get it out of my head on 2024, about how unhappy people were at the cost of living and buying just like basic things at the supermarket, the cost of your weekly shop. What is the misery index telling you, James, about what's ahead? And first of all, back up a bit. What is the misery index?
Oh, the misery index. So economists, we like to put a couple of numbers together and tie a big ribbon around it and make it into an interesting thing. But the misery index is a combination of the unemployment rate and the inflation rate. And so when we think back to periods in economic history, when there was stagflationary environments, when inflation was high and growth was weak and unemployment was high, those are very, very bad times for households and consumers, living standards going backwards and you not being able to get a pay rise to catch up with the rising cost of goods. And so that's pretty miserable. And so when we combine the unemployment rate and the inflation rate into this thing called a misery index, well, when we look at Australia, things have improved a lot on that measure. The unemployment rate's very, very low, near record low. Well, sorry, it's at 4% now. It's really hasn't moved much in a year and is well below what the RBA thinks full employment is. And inflation, the headline measures have come back down to inside the RBA's target band. So why aren't things great? Why are consumers still so grumpy? Well, it's because it's just not as simple as the two things combined together. There's other things that really hit households hard, and that's where some other economists did an adaptation, an update, a misery index 2.0, where they added in the policy rate and the per capita GDP growth, because you want the economy not just to grow, you want it to grow for you. And so that's where per capita GDP is important. And when we look at those things, Australia's had 2 years of per person GDP declining. Even though the economy grew, per person, it didn't grow so much because we had that strong population growth coming through. And the RBA has kept interest rates very high for a longer than usual time. And so when we add those two things in, it's still a very miserable time for consumers. But our projection when we're forecasting and looking at the year ahead is that with interest rates coming down and with the economy finally starting to find a better footing, with population growth easing but growth starting to pick up a bit, we should see that misery index, that adapted one, things getting a little bit better on that front. Consumers, hopefully, as the year rolls on, holding their heads a bit higher.
Yeah, I do hope so too. And let's stick with consumers just for a minute. And, looking back on where growth has come from in 2024, government spending has played a big role there, right? Like consumer spending on the other hand has been a weak spot. Are we going to see that shift in 2025, or are you projecting more of the same?
No, we're projecting a couple of, I guess, baton changes or big shifts in the kind of in the sources and the style of economic growth. So we had seen last year in 2024, public demand was one of the key drivers of growth, and on net, with sluggish consumers, bit of weakness in mining demand, bit of net exports. Private sector demand was an offsetting weakness, and the economy is soft overall. This year, we're seeing private demand step up. But in order to get there, we need something else to happen. So within consumer spending, and we've got migration easing. The government put a lot of measures in to dial back the rapid pace of migration, and that's going to slow population growth. But that migration was boosting consumer spending. But per person, consumer spending was soft. And so we need to see consumers individually open their wallets this year in order for that transition, that baton change from public to private to come through. So we need that baton change within households from more consumers to consumers spending more. That's going to be key. And in order to get that, we think that the RBA is going to need to be a little bit more helpful in easing off the monetary policy brakes and supporting spending this year.
Yes, quite right. Those high interest rates. Given that we're about to have an election, how should we be thinking about this inflation pain that voters across the board are experiencing? Is this just automatically translated into electoral pain for the government, or is it more complicated than that?
Well, I mean, it's always more complicated, but it is something that we've seen across the world over the course of the elections last year. And it's going to be something that I think the government here would be very worried about. So worried that the measures that they put in place at the state level and the federal level last year, some of them we think there's a good chance, especially on electricity subsidies, that they might be extended before the election date is announced. We do have a final budget due from the government in March, and so we could see that trying to make sure that they're reminding consumers that that they are trying to do their best to help. We could see some additional measures there to help consumers with their pain and hopefully head off at the pass consumers taking that pain out at the ballot box.
I want to ask you now a bit about the external environment, that is everything that happens outside of Australia that affects our economy inside Australia. We've got a second Trump administration, as I mentioned at the start. China's economy, it's struggling. We've got a strong US dollar, and that's seen our own dollar push towards 60 US cents. We are a couple of months past the US election now, right? What is the latest on how Donald Trump's second term in the Oval Office is going to impact Australia's economy? Is that the key nation that we should be focused on, at least for 2025?
Well, I think that directly we probably aren't that much under the gun as some other economies might be. So, we've heard since the election or during the election and then following Donald Trump's victory, we've heard a lot about tariffs being imposed, especially on other countries like China and those countries that have large trade surpluses with the US. That's not necessarily Australia's position. We're probably what the US would like. We buy more from the US. We have a trade deficit with the US. We buy more from the US than the US buys from us. we're the kind of customer that would make Donald Trump happy. And so we're not likely to be targeted for tariffs on our own the way some of those other countries are. But we still have a little bit to worry about, and that's because countries like China and Japan, they are some of Australia's major export destinations. And so if we do have measures from the US that do impact those economies, well, that could flow through in an indirect way to our exports. And so what we really need to worry about there is that, not so much what China does, what the US does to China or Japan, but how China and Japan respond. If those governments do things that boost domestic demand, that might help them demand a bit more exports from the US and narrow their trade deficits that way, some of that demand boost might flow over into more export demand from us. So we want to be looking for signs that policymakers in Japan and China and in some of these other countries are delivering stimulus to their economies, because that could be something make or break for whether those countries, the impacts from the US on them, spill over to us.
And when we come back, James tells us when he thinks we'll finally see some relief for Australia's housing crisis.
We always do see corrections, but every cycle we see the 30%ers come out and say it's going to drop by that amount, and it never does. I mean, we do see declines in Australian property prices, but they do tend to be quite mild. I mean, we are a country that does welcome immigration. We're not very good at building. We love living in big homes. So, all of those things do make it structurally a market that does remain very expensive.
And welcome back to the Bloomberg Australia podcast. I'm Rebecca Jones, here today talking to James McIntyre from Bloomberg Economics on what's ahead for 2025. We just heard there from Ray White, Chief Economist Nerida Conisbee, on the state of Australia's housing market. And look, James, I can't tell you hand on heart that I haven't been one of those people that's sat on my phone scrolling the real estate apps thinking, gosh, so expensive. Maybe it really could fall 30%. But I'm not alone, right? Like, it does feel like no discussion can occur in Australia without at least one person mentioning the state of the housing market. What's ahead for us?
Well, there is a little bit less pain, and some of that's because of some wages and income gain for households. That's going to be something that is really important when we think about the affordability equation for housing. On the rental side of things, the pain for renters, it has been really acute the last couple of years. But what we've been seeing a response to that. People have been taking on flatmates, staying at home, or not moving out as soon as they wanted before, and maybe deciding that they don't need a second bedroom because we're all working back in the office instead of at home. And all of those changes are resulting in a little bit of demand coming out of the rental market. And so rent rises are likely to continue to sort of peter out and come back in line with income gains over the course of this year. But when we go to housing markets and when we think about prices, well, it's really been there's been pain in some cities and not a lot in others in 2024, and maybe some of that might shift this year. So smaller capitals like Brisbane, Perth, Adelaide, they've had extremely strong house price gains over the last couple of years. They were more affordable. And so households with those interest rate cuts that we did have, and even with interest rate rises, could still afford to bid up the price of dwellings there. Whereas Sydney and Melbourne, affordability was a real constraint in those capitals. Sydney prices rose only modestly. Melbourne, we had very weak conditions there and some declines. But when we look at the year ahead, it might be slightly better on the price front, especially for those bigger cities. Myself and my colleagues at Bloomberg Intelligence do a lot of modelling of affordability in housing markets, and our estimate is that for every 25 basis points cut from the RBA translates into a 2% improvement in borrowing capacity for households. And, we could in some of those, along with wage increases and slightly less inflation, see a little bit of improvement, and maybe some of those increases in capacity to pay winding their way into prices for Sydney and Melbourne this year, and a little bit of an improvement in conditions there. We'll have to see.
So to recap, we've got a rate cut coming this year, but it might not be as fast as we'd all like. Trump's back in charge, but we also need to be keeping an eye on what happens with both Japan and China. The upcoming Aussie election could be potentially decided on inflation, although according to the Misery Index, we're not as glum as we once were. And house prices and rental affordability, well, both showing some signs of improvement. James, maybe this is going to be our year. Thank you for joining me, and thank you for listening to the Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri and Gadigal people of the Kulin and Eora Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.